All right. Good morning. What's going on, guys? It's 9:35 a.m. Wednesday, September 25th. Actually was on my way to go for a run and totally forgot I had this scheduled. So today's going to be a quick one. What I want to do is kind of go through the portfolio. It seems like it's fighting to be a green day. We've had pretty strong recoveries. Let me just make sure we're streaming on all sites. It seems like it's fighting. There we go. All right, and we got a green. So I want to go over all the trades that I have open, sort of what the game plan is, and then also go through the Intuit four-man covers call play that we've been doing. Kind of check in, see where we're at with our results, see if we want to continue holding them. I made a post about it yesterday with all the detailed trades. So if you want to go and take a look, just go to my profile. I'm going to be pulling up that post now as well so we can kind of go through it together. So when we look at our portfolio right now, we're touching 2018, $218,000. Haven't gone there yet. So pretty much what I have open is, let's start with Clean Spark. Clean Spark's been fighting its way back. I've got 2 calls underwater. Now, the thing with Clean Spark is that it's very, very volatile. I mean, this stock is absolutely crazy volatile. I've told the story on my position with this particular stock. I started buying at 17, averaged down with the premium and bought some more at the bottom. So I'm averaged at about $12 a share. I have 2 950 calls open, so I'll probably have to roll those, even though it's very soon to tell because this stock is crazy. I may have to roll the 10 as well. Not an issue. I got to get these calls, or I got to ride it up all the way till 12-13. So we'll have to keep an eye on those. Intuit, we'll leave that for the end. Palantir, it seems like it's rocketing again this morning. 36.87. It seems like 37 because has been a pretty strong resistance point. What was the highest here? 38. So 38, I think, is going to be the top. I'm going to call it here, at least for another year. I think it's going to bounce back around that price now, unless earnings completely surprises everybody. Especially with these companies, these new contracts they get, they influence the bottom line a lot. And if this is a blowout, then this could very well continue running. All right, so that's Palantir, Tesla. I'll go over Tesla in a bit. Riot just absolutely exploded. And I may close some positions here, but it just absolutely exploded from $7 just 5 days ago. I opened up a lot of these during that time. So what I'll probably do is, these are all $7 puts. So part of what I've been trying to work on is let my winning trades ride out. And I'm very tempted to close maybe one of these positions. Just because if I look at it, I probably already captured a big percentage of it. So I'm already 50% in, and I sold these yesterday, right? So the question is, do I want to wait another week and 2 days for the other 50%, or cut my loss, or take my profit and redeploy that in another trade that could possibly give me those results as well? So in order for me to answer this question, it's very simple, because I'm just going to do the math. I'm going to see what is the ROI on the remaining 50% based on the collateral I have saved here. So the collateral, these are $700 of collateral per contract. So if what I have left is $13 for every 700, you're pretty much looking at almost a 2% return in a week and a half. So even with the 50%, a 1.5%, close to 2% in a little bit over a week is actually pretty good. So, and I feel comfortable with it. It's a good trade. I'm already close to 50 cents above our strike. So, you know what? Let's let that position ride. SoFi is pretty much just dead in the water right now for me. And I say that because I've got pretty much 2 positions that expire in January. So I'm not really looking at this day to day. I'm going to just really approach it as I get closer. January 25, January 25. I did sell 10 750 puts for expiration in 2 weeks. Now, here's the thing with SoFi. SoFi is very volatile, and it may very well be below 750 tomorrow. You know, what we do know is that 8 to 815 is kind of like the height of it. It is very well correlated with the reduction in interest rates, so it's a good position to hold going into that. But the reality is that you could probably swing trade this. And what I mean by that is we have 10 contracts. So I'll probably sell 5 at 9. I'll rebuy 5 of them, close out 5, and then just keep track of the position. And every time it touches 14, I buy more. And every time it goes back down to 9, I sell them, you know, and just rinse and repeat. So I may actually do that, especially if we can get filled at, you know, what do you think we can get filled at? 9? All right, so let's let that run. You know, let's see if it fills. All right, so now let's go to the INTU, right? So one of the biggest, one of the most important factors to consider in your poor man's covered call, and the reason why you should do it with leaps. You should do it with very long dated calls. I'm talking ones that expire in a year, right? Because when you do 2 weeks, 3 weeks, 4 months, the theta decay on these calls is so fast, or it ramps up, especially near the end, that even as you're selling calls on it, the premium isn't enough because you're burning through them so quick. So you have to be careful in how far out you buy them. Now, in this particular situation, I have ones that are expiring pretty soon, October 18th. So that's less than a month. And then I have some December 20th, which is like 2-3 months, right? I wish I would have bought them out further. I think I'm going to be okay with the December ones. Oh, look, our SoFi just executed. So I'm really looking to get rid of this one because, look, and I think it'll even show us how fast the theta decay is on this. If you go to the simulate my returns, and let's say it stays at this current price, which is below the strike, look how it comes down, and then you're pretty much already at max loss 4 days early, you know? So you can see how it ramps pretty much almost flat, right? And then as a matter of fact, if we look at the long dated ones, I want to show you how there should be a difference in the bell curve there. So you see how it comes, there's a pattern here, and then boom, here it flattens out. This is where you lose the most amount of premium. Right? So look, right now we're at 5. It's basically, if it stays at this price, it's pretty much $1,000 a week that I lose. Now, luckily, the INTU is kind of going. INTU is very volatile. I mean, if you look at these, which is good because it's stayed within range. You know, 670 is kind of the highest, with 602, 615 being the lowest. So those are pretty safe bets on selling calls. 655, 647.50, 660, 650. These are the 2 sells. Yep, I sold 1 put as well. Good. These are all expiring. Now, what I don't like is that I haven't deployed. I have 1, 2, 3, 4, 5, 6. I've only done 6 contracts, and I have 10 long calls. So that means I have 4 that I'm looking to either sell the contracts on, which I will probably. It'll probably be 1018. These I'm going to get rid of. I mean, they're already valued at 173. I could probably get that in a week's premium, So I may just let this run unencumbered without a call until that long position rides up, and then I'll probably sell it early, or I'll sell it in one of these strikes up. I mean, it looks like it's probably going to come back down unless it hits this. I mean, it has pretty good floor here at 633. So let's see if it goes past it. The landscapers are here, so let's go try to wrap this up, guys. All right, Tesla. Let's look at Tesla. So Tesla position is the one that, I'm ready to roll this for the rest of my life if I need to. I'm not letting go of it. And truthfully, the returns on rolling are not bad at all. It's a pretty decent return, and it's I don't want to say guaranteed, but as long as the stock stays above the strike price that you sold it at, it almost is guaranteed. It's just data profit, So like, for example, right, these 205s here, obviously I'm underwater. So if I was to say, you know what, I'm going to roll these out. When I want to see is if I was to do a year, right? So if I was to say, you know what, these for another year, so I already have until December, but let's say till January of 26 is when I'm going to look at these shares. Or December of 25. So the current value of the 205 call is 59,000, or sorry, 5,900. So that means that I would be able to go all the way up to 270 for a net credit of $1,120. So let's do the math real quick. I have a share appreciation of $65. Okay, $65, which is 6,500. 6,500 plus the 1,120 from the premium. That is from the premium 7620. That's 7620 divided by my cost basis that I bought these shares at. Right? Because I bought them for 174.30 something, so 174. Right? That's how much I bought 100 shares for. So if I was to roll it out for an additional year, my return would be 43%. So you're telling me that as long as Tesla stays above 270, or hopefully it doesn't, because then at that point I just keep my premium, I get a return of 43%. So that's why I'm not concerned about these calls being underwater. So as long as you have time, you're good. The only thing I do have with Tesla is I believe I have one call expiring soon, which I may roll just because, when they're so in the money, there's so little, so little value left on the stock as far as time goes, extrinsic value, that you don't want to run the risk of it getting assigned, right? So, for example, this 205 right now, Tesla's at 254.47. So if I was to take the difference of that, so 254.47 minus 205 is 49.47. So 49.47 minus what the option's worth right now, 49.58, let's say. That's 11 cents left on time here. So that's what this is really worth if you look at it, how much time is left. So not worth a lot, $10, $11. So I'm actually gonna roll this out. Good that Tesla just turned green. October. Let's go to October 11th. See what happens here. Take advantage of that premium bump there. So 4,900. Can't go that high yet. 4,600, 4,000, 5,000, 205. Huh. So it would be a 205. We gotta keep going, man. I want to go at least up $1. This should be it though. 210, 48. Oof, 48. Still no. I think this is it. 49, 45. $30. Will we get filled? May have to go down to 25. Yeah. All right, cool. So we got filled on that one. We just rolled it. So we gained pretty much $5 in appreciation. Right, so from 205 to 210, that's $5. 500 plus 30 in appreciation or 20 divided by what I bought these for. 3% in a month. It's not crazy good, but it's not bad for being a roll. That's 3% a month. You know, that's 36% a year. So it's not crazy bad. Seems like we have some red days planned here. SoFi. You see, SoFi. Did we? I think we did sell them, right? No, we didn't. We held on to these. No, we did. We did. We sold half of these. Let's see. Look, they're worth $10 now. What did we sell them at? We sold 5 contracts at 9. So technically, we're already making I could rebuy these now for $1 profit. But it's a red day, and I think SoFi is going to continue going down. Let's see. We are at 17 minutes. I just want to make sure I don't go over it. Make sure, guys, if you have any questions, put them in the chat on either X or YouTube. I'll address them right away. Now, what I like to do, just so I don't have to be a slave to my phone, is I'm going to set some time, some trigger points here. So obviously, if it goes above 654, no, it was something less than that. 658. Honestly, 645. 645. And then let's do 650. And then on the lower end, honestly, this is a concern right here. 632. 632, 632, 93. $533. 632, 633. That's fine. And truthfully, I may even, if I see this bottoms out, well, let's see something. Sometimes I like to look at the RSI and the Bollinger Bands to see what's going on. Look at the deal book. So there's a good floor being built here. These are people that are willing to buy them at those shares. So if it goes lower and you see a good size buy orders, technically just means that it has a good demand, right? On the supply side, there's I mean, honestly, it looks pretty equal to me, but you can see here that it's a little bit steeper on the sell side. So that leads me to incline that there's a bigger wall preventing it from going up than going down. Oh, and it tells you right there. Pretty cool. All right, so we're pretty much riding the bottom of our Bollinger Band. So I do, and we're right below the 200 moving average. Yeah, we're right below the 200 moving average. 200 moving average is 645, so we're right below it. We just broke the the 200 day. You know, this was pretty much riding. It bounced right off of it, came back below it, and it's pretty much just riding at its curve tail. Same with the RSI indicator. We're pretty much at the bottom. Got a good little correction here, so good. It touched kind of a good support. I'm gonna look here to see which ones have the least amount of meat on their bone, and look into possibly selling those. I may close one of these. But only at 150. So we'll let that right there. You know, if it continues to go down, it will fill. If not, it goes back up. All right, guys, so that's it. We kind of left this little loaded thing there. You see, look at that. If INTU continues to go up, this portfolio could technically, honestly, if it just rips like it does, if INTU rips like it normally does, I mean, look at these spikes that it goes on. You know, if we had this situation going on right now, we could very well hit 220 today. And I would probably sell all the October ones. This is probably gone. Now they're asking, it's still not bad. Let's just do this. $160. I think that's a fair price. Max cost. Yes. All right. All right, guys. Well, that is pretty much it. Let me check here to see if I see anything that you guys asked. I don't see it there. So that will wrap it up for today, guys. Thank you for joining. I'll probably try to do another one on Friday as things expire, Friday 3 p.m. But having said that, good luck with you guys. Good luck with your trades, and we'll see you later. Oh, shit. I almost forgot the trading rule. All right. So the second trading rule that I have for today is if the trend is not your friend, if trend not your friend, carefully reassess, especially credit spreads. I mean, this is a pretty good general rule. You know, look at the 200 moving average, look at any strong resistance points that it's, you know, just try to get some clues from the charts and look for a trend, you know, and obviously the most important trend is, you know, your 5-year, you know, or your 1 year, you know, look at how do the charts look. I mean, look, honestly, this looks pretty flat. This honestly would have been an option seller's paradise here. You know, I mean, it hasn't really done anything. We see it slowly climb up all the way to 670, but then after earnings, it just plummeted. It's sort of recovered, and it's just trying to keep that price, and it looks like a pretty good chart for option selling. What did concern me is the 200-day moving average. It's pretty much touching it. I believe on the 1 week, it already crossed it. It shows that it already got crossed. That's not good. Now, look, you can see here that sometimes it goes below and then it overcorrects, comes back down, overcorrects. It's always kind of kept the 200 in the middle. It's always kind of reverted back to the mean. So right now, it kind of looks like it may do the same thing, just kind of resort to the mean, and then we'll have to either wait for it to come back up. It seems like it spikes a lot. Bollinger Bands, it's you can usually tell when it touches the height of a Bollinger Band, it's going to bounce back down, and it very rarely rips out of it. So that's also something to keep an eye on, and on more or less when you see, look at this, right when where the top is more or less, and it always reverts back to the mean, overcorrects a bit. Here it kind of, I think, overcorrected a bit, and I think we're going to see it. We're going to see it bounce right at the Bollinger Band. All right, guys. Yeah, but look, that's pretty much it on that trading rule. It's a pretty simple one. It's probably the most obvious one, right? It's like if you're going to buy a car, first thing you probably look at is make sure there's no dents, right? Just because it's the most obvious thing and the most important thing doesn't mean that it shouldn't be mentioned. You gotta love the chart, whether unless your thesis is something completely different and you're basing it on a turnaround. The reality is that momentum is very strong on these companies, and it's very hard for a company that's had 3, 4, 5 year momentum on the downside to turn it around. So like one of my favorite charts is O'Reilly. Man, that stock is awesome. I mean, look at this chart. I think wow, it's already up to 1,135. Look at the max chart on this thing. Look at the beauty of it. I mean, this is like, all right, I'll invest in this. So anyways, guys, I'll leave you with that and have a good week.